Welcome back to another episode of the Good Question podcast by CoinScheduleTV.
Hello everybody. Today on Good Question, I had on Angel Versetti, a Forbes 30 under 30 and the Global CEO of Ambrosus. For this episode, we honed in on blockchain disruption of global supply chains and how that will change the global power structures, improve trade and production transparency, and most importantly, facilitate conscious consumerism. Don't forget to like and share this video and subscribe to our channel. We hope you enjoy. I've been to a lot of conferences over the last couple of months and I've met some very interesting people who have spoken about integrating supply chains and blockchains. And if I'm honest, it is a blind spot and it's something that I want to learn more about. And my first question to you is, why do you need a blockchain for a supply chain and what value does that add?
Well, at a basic level, blockchain gives you trust in the data. So in supply chains, most of the problems are actually linked to lack of data in general or lack of reliable data, so the data that one can trust. And blockchain is a perfect response to these problems in the sense that if you collect the right information about, ownership of the product, location of the product, conditions in which it finds itself in, and associated financial transactions, then you can definitely improve a lot of processes within the supply chain and also enable different stakeholders to trust each other. So right now, a lot of inefficiencies are due to the fact that people are trying to make arrangements that would reduce their risks, or they seem to have to trust their partner based on how long they've dealt with them and so on. But it doesn't prevent all the fraud from happening and all the problems, counterfeit goods, improper storage, and so on. So from this perspective, blockchain can be that universally trusted platform to provide data integrity.
Okay, that's very interesting. And when you refer to blockchain, out of curiosity, are you referring to open blockchain projects like Ethereum or closed blockchain projects like IBM's Hyperledger?
Open blockchain, because if it's closed or private, why use a blockchain in the first place?
Oh, amazing! Because that was the question that I was interested about. Because many of the people that I've met who speak about supply chain blockchains, they talk about Hyperledger being the primary platform being used for this kind of use case, and I'm not sure how much value I see in those kind of platforms, if I'm perfectly honest.
Yeah, well, I'm always saying that whenever I have an opportunity, that the problem of Hyperledger is that it's not trustworthy. That's for me a fundamental problem with it. That companies using it obviously can rely on it, but the rest of the society, the world in general, cannot trust the data because it's either one company or a small group of companies who control what is true. They control all the data. They can do whatever they want with it. So from that perspective, it must be a public chain. And I think we also have to ask ourselves, what are the processes that blockchain is improving in the supply chain? And in case of Hyperledger, it's very useful for internal process management. So if, let's say, there is a company and it's got a few partners or suppliers, and they want between themselves to agree on what is true, then a solution like Hyperledger is useful. And this is the reason why a lot of companies have been using it and integrating it. Besides the fact that it's done by IBM, who is a huge company, and there's a kind of a saying that you can never get fired for choosing IBM. So first, it's something that a lot of management is happy to try out. But secondly, for internal process management, it does provide benefits to companies. However, if we're talking about trust of the consumers, trust by the governments, trust by external stakeholders, then a solution like Hyperledger doesn't really change anything. So you might as well just use, a private database or a mirrored database using cloud architecture. You'll just have the same thing. So yeah, it all depends what is the benefit you're seeking. But yeah, when they communicate that, consumers can now trust this data, that's I would say misleading.
Yes, that's very true. And which open blockchain platform do you use and that you see the best that can work with supply chains the best?
Well, we've built our own blockchain, we've built our own architecture. So from that perspective, we're using our own. And the reason why we decided to do that is that for us, we combine two technologies to provide solutions for the supply chain, which is blockchain and IoT. And by IoT, I mean creating secure protocols between sensors, so between the physical objects as close as possible to them, and the distributed ledgers. And in most cases, in the public blockchains, the problem you have is that while the chain itself is secure, the journey of the data from sensors to the blockchain is absolutely insecure, in the sense that it goes through servers, through centralized points, or it's even put in tables, which are then uploaded into the public chain. So before it gets there, it can already be corrupted. So we decided to tackle this problem head on with designing the architecture that specifically responds to this problem. And how we did that? Well, we created basically a notion of, we call that a gateway, so an edge gateway. It's basically a piece of hardware that has connectivity both to the internet as well as locally using Bluetooth, for instance, to connect to smaller sensors or devices. So imagine you have a container inside of which you have temperature sensors, humidity, a GPS, or any other sensors that can provide valuable data. And then, and those sensors may or may not have unique ID, but the gateway definitely has a unique ID. So you can identify what particular container the gateway sources the data from. And then what it does, it basically sends this data to the blockchain directly and couples it with a cryptographic signature. And the cryptographic signature validates that the transaction took place in the right container and that the data can be trusted. So it's a similar principle to how the hardware wallets are working. And to make sure that this architecture is suitable, that the architecture is suitable to our needs, we've built our own blockchain. We've enabled layer 2 scalability on it. So instead of transactions, we have what we call bundles. A bundle, just as the name suggests, it's a bunch of transactions bundled together. And with that, we've achieved about 50,000 transactions per second. So that's the scalability we've built. So these are the reasons why we're using our own chain and our own architecture.
Wow, 50,000 transactions per second. That's a lot. I presume then this is built with the proof of stake consensus mechanism?
So the consensus mechanism for validators is basically POA, it's proof of authority. But around that, we have the second layer. So as I've said, the scalability is achieved with layer 2. We have basically, it's like a distributed network of, we call them data carriers, Hermes nodes. And those basically store these bundles. So for them, the model is similar to delegated proof of stake for the data carriers and proof of authority for the validators. So we have basically two layers. But in terms of processing and validating the data at layer 1, that's just a POA, proof of authority.
Right, interesting. I'll have to do some research into proof of authority. And so I was just wondering, what products have you seen the most successful implementation of blockchain supply chains? Is it like it in wine? Is it in cheese? Is it in supermarkets? Like where has supply chain based blockchains had the most difference so far?
Well, for us, from the adoption and commercialization point of view, just like any technology, the one where it makes most sense is the most expensive products. Because currently, of course, companies have to commit resources, they have to change their processes and so on. So they are trying it on those products where there is the largest opportunity to reduce costs or to increase sales. So for us, it's been a lot of luxury grade products. So we've dealt with vanilla, which is one of the most expensive agricultural commodities. It's more expensive than silver. We have dealt successfully with high quality medicines, so medical products. We have also built successful use cases for just premium goods such as alcohol, which, expensive wines, expensive whiskeys, and right now we're also building use cases on tobacco. So basically products where the margins of profit are higher, where there is more propensity to counterfeit amongst malicious actors, and where companies are investing a lot in their brand and maintenance. So these are the use cases where we've had most success so far. Another interesting pathway for which there is a lot of interest from the governmental sector or public sector more broadly is the sustainability element. So using our platform, companies and stakeholders can verify the sustainability of their goods, that it's sourced from the right farms where they follow fair practices or environmental friendly conditions, It's the fact that the supply chain is CO2. Basically, it's less CO2. There are less CO2 emissions than in other supply chains. So it's calculating carbon emissions or any other parameters where you basically need data from sensors or other sources to prove to your consumers and to governments that your company is following the best practices to produce goods and services.
And you just mentioned that at the moment you're going for the high value products with the high profit margins. Is that so you can get economies of scale, and then as you scale these solutions, you can lower the cost of having a blockchain supply chain, and then maybe move into the markets that have smaller margins?
That's right. Yes.
Okay, wow. And so what's the time horizon for this? Where do you think this is going to be in 5 years' time?
Well, in 5 years' time, I definitely see that supply chains. For instance, I have the best insights, obviously, in Europe because we work mostly within Europe. So I think here in 5 years, I'm positive that blockchain will be the backbone of European supply chains. That I'm pretty certain of. So right now, the biggest tasks are engaging the public sector stakeholders, showing to them the benefits of the technology and how it can benefit the trade, above all trade, because obviously most countries are concerned about, import exports, but they also want to protect their consumers. And in the EU, for instance, the basic barriers that are erected vis-a-vis the external trading partners are proof of origin and proof of quality for products. These are the two main parameters that are barriers of trade. The rest is derivatives of those two. So for us, and even you could argue that origin is also the derivative of quality because, with certain places, you associate better quality products. So it's all about quality in the end. And what we provide is basically we educate various policymakers, politicians, C-level executives in companies on the benefits of our solution or of blockchain in general, of course. And the goal is to, in the next 2.5 years, to have more adoption at the public level of appropriate regulations or at least guidelines for the industry about what systems they should use to assure the quality and origins of their products. And then we can move on from there. And for instance, in November, I was a speaker at the European Parliament in Brussels. On these topics, I was specifically addressing the question of the EU trade. And similarly, actually already on Tuesday, I think the 19th, I'll be again in Brussels at the European Commission meeting where there'll be also a panel on the supply chain where I'll also kind of bring discuss the benefits of these use cases in the supply chain. So it's a lot of education of basically of politicians and public sector.
Yeah, I can imagine politicians are pretty blind on this potential. And my question then is the regulation or lack thereof stifling innovation in the space?
Is the regulation stifling innovation in this space?
Yes.
Yes. I mean, I used to be more kind of silent about this, I guess, in the past, in order not to get kind of negative attention. But right now, I think the situation with the industry is so bad in general across most of you. I would say all of Europe, to be honest, that I think it's no longer the position where, let's stay silent and, things are going the wrong way in most places. And I think the biggest problem is, of course, the inseparability of blockchain and cryptocurrencies. And there is definitely a popular, a big and popular opinion amongst a big fraction of all these consultants, experts, and whatever, these talking heads, as I call them, these people who talk on stages or even advise governments, but who have no opinion of their own, and they're afraid to have an opinion in order not to be wrong, right? So they're trying to choose something that's, they are least likely to be wrong. So a lot of them are saying, yeah, crypto is bad, but blockchain is good. And which is another argument in favor of Hyperledger, of course. I'm pretty sure they are financing a lot of this narrative, a lot of this agenda that, crypto is bad, but blockchain is good because their blockchain has no crypto, right? So, but what it creates is that obviously when you deal with large corporations, and there is no single corporation in Europe of large size that doesn't have, governmental links of one sort of another or another. So of course they also don't want to have troubles within the, vis-a-vis the government. So if there's anything to do with crypto, they're very negative towards it. So from that perspective, the biggest bunch of regulations are around, the fact that crypto is bad, money laundering is bad, and all this stuff. Money laundering is bad is no question, but the fact that they equate money laundering with crypto is, for me, problematic. So this stuff is difficult. Then, of course, the fact that for blockchain itself, there are also, of course, regulations and requirements whereby a lot of companies also follow different guidelines on like GDPR in Europe or some other regulations where they have to basically use existing standards for safety or functionality. And they try and put it on the blockchain, but it doesn't work. To give you one practical example, there is a basic test of like who controls the network, right? And if you cannot prove who controls the network, you can't have the party responsible for data safety and privacy. But blockchain itself must be decentralized. It must be without this central party controlling this data or assuming sole responsibility for it. Is just not possible by nature. But in the legal sense, because of regulations, large companies they cannot essentially engage when they have a situation like this, which is why even Ethereum or Bitcoin, the blockchains which are the most trustworthy in terms of decentralization, companies are not really, they're using them for testing, but they're absolutely not adopting them because legally speaking, they cannot. They can only experiment with them. And this is also a big problem that basically as long as your blockchain is public in the proper sense of that word, it's distributed, then you will end up in legal trouble because of the way the regulations are. So yeah, regulations are, I would say, killing innovation in Europe.
Yeah, I would agree completely. And my follow-up to that is, if you had a magic wand, what legislation or set of legislations would you put into place that should free up innovation and then help open blockchains accelerate in Europe?
They should do some sort of a sandbox approach, right? And some countries do have what they call sandbox, but it's again, in practice, it's a bit of a misleading word in the sense that they allow you to play around with it, but as long as you move to commercialization, you run against the same obstacles. In general, from the philosophical point of view, I am the adherent to that kind of law that, there are two kinds of law, two kinds of regulations, regulatory frameworks. There is the principle that whatever is not allowed is prohibited. And then there is also whatever is not prohibited is allowed. And I really like the second one, right? And it's kind of, there are some people that say like the common law countries, which is the UK and the USA, are the ones where whatever is not prohibited is allowed, more or less. Whereas Europe, most of continental Europe is the opposite. It's whatever is not allowed is prohibited. So taking that approach would be better because you cannot define everything that is allowed, right? And you cannot pull all the concepts. By delineating what is allowed, you're already limiting the creative space for companies and innovators. So they should, in my opinion, regulators should take the approach of, okay, if something becomes harmful, right, then of course you should definitely put regulations in place and limit that. But then we're facing, if you look at it from one layer above, you actually have a bigger problem that blockchain creates an existential threat for most of the government regulators, lawyers, compliant officers, and banks. And these are the group of very entrenched elites who don't want to lose that position. They're very well aware of the power that blockchain represents. So the funny thing is that the gatekeepers and regulations on blockchain are the same group of people whom blockchain is going to eradicate, which is why we have this problem.
Yes, I agree. And something that I'm genuinely curious about is how you translate a physical asset into a digital asset and then put it on the blockchain. Could you use an example to kind of explain how that process unfolds?
Yes, so we use tagging. Tagging can be an RFID sticker. It could be a QR code. It could be a more sophisticated tagging solution, such as, for example, a bubble film for watches. So there is a tag that within the tag, it contains a unique ID. And the moment this unique ID is created, the process itself is recorded on the blockchain. So recorded in the blockchain, the process of I've just created an asset number 001, to use a simple example. In practice, of course, it's a long string of digits and numbers, but you put the number of the asset you've created, you reflect it on the blockchain, and then this unique ID is linked to a particular product, or if we're talking about lower margin goods or cheaper products, maybe to a bigger unit. We call them transport units. For example, a transport unit may contain 10 boxes of goods, right? And then this tag becomes the point of reference for the product. And then as it's moving through the supply chain, it's scanned at different stages, or it may have its own GPS tracker and just communicate the location and conditions in which the container or the box finds itself in to the chain, and then it records additional string of events, recording all this information: temperature, humidity, pressure, location, time, ownership, and so on. And then this product, when the final recipient once again scans it using either a mobile phone or a specialized scanner or a reader, they may receive full information from the product, and they know that it came to this particular unit from this particular unit. So the translation of physical object to digital is basically a combination of a tagging of a tag and the process of creating these assets and events, which is this unique invention of Ambrosus.
Okay, cool. And my final question for you is simply, the world that we live in, the globalized world, it has extremely complex, extremely long supply chains. Obviously, blockchain is here to revolutionize that. How disintermediated can globalization become if blockchain technology is optimized and integrated all throughout society?
It's an interesting question, and a lot of people portray, very kind of fairy tale-ish vision of how it can be. We take a more realistic approach. On our side, for instance, the intermediaries, if we take the consumer goods supply chains, or even let's narrow it down to agricultural goods supply chains, we don't expect that with this solution we will eradicate these intermediaries, because we've run a lot of projects where actually we saw that it actually makes sense to have intermediaries, because it's not many products where you may have direct sales available between the actual producer and the end consumer, because the logistics are not there. You cannot teleport products or whatever. You still need logistics companies, transport, and potentially people who will hold products in warehouses, etc. What is, however, important here is the fact that these intermediaries, these middlemen, will not have leverage against farmers, against producers, or against the end consumers. Right now, there is, let's say, a big problem that a lot of these intermediaries are the only buyer of products for manufacturers, for farmers, or for producers of consumer goods. So they are in a very unfair position. It's called monopsony. Basically, like monopoly is one seller only, and monopsony is one buyer only, right? And the buyer basically exercises market control on the price. And what it creates basically a problem where farmers or other producers are not really they have minimum price they're receiving for their products. They have no motivation to improve the quality, and the price is so low that they have to resort to bad practices to make sure they can make the ends meet, because these intermediaries, these powerful buyers who are basically the global cartel of shipping companies and companies who are basically resellers of stuff, they control them. If, however, they could actually provide more visibility on the quality of their products, that we produce better goods, and actually, the value of my good is $1, and this guy is buying it from me for 50 cents. And on the other end, there are also a lot of people looking for better quality products. There are restaurants, there are organic shops, which are booming all over the world and increasing their market share. So the demand for quality, if we're just talking about food, the demand for quality products, whether the quality means sustainable, GMO-free, or ethically produced, whatever criteria you're using, it's going up. And people are ready to pay sometimes 2-3 times the price for a higher quality product. So what this can create is essentially a fairer position for farmers where they can have a better choice of whom to engage as the intermediary. Because if people can discover their products better and they can trust that, if a farmer simply says, hey, I have the best quality chicken or best quality vegetables, well, it's just their claim, right? Some of them may try and say, hey, I'm selling it to you for $5, but it's really good quality, but you basically trust the word. But you don't know if maybe you're getting cheated or not, which is why most people anyway resort to supermarkets, because they assume supermarkets perform some kind of, quality control or choose the best. But here, you could actually empower these producers to provide this. You enable them to provide the data about the quality of their products, and those intermediaries suddenly, instead of having the sole buying power, they become a commodity. So they will be competing. Different shipping or logistics companies will be competing with each other to distribute products of these better producers. So this is like, we're not trying to change the way supply chains work. We're trying to change the positions of power within the supply chain and bring more power to the farmers, to the producers of products, and to the consumer, because also the consumer today doesn't really have a proper choice. We have a lot of goods in the supermarket, but it's an illusion because all these different brands and packages are owned by, I think, 8 companies all around the world, 8 large corporations. They own about 80% of all brands in consumer goods. So wow. It's an illusion of choice, and it's all linked down to the fact that these intermediaries and the powerful brands, they control this. So consumers have no real power and producers have no real power. It's the big buyers and intermediaries, because in the end, big corporations producing products are not the producers. They buy something for very little, they package it, market it, and they resell it. But that's the added value is not in quality. It's purely speculative. It's like psychology, advertisement, branding, and whatnot. But if we provide the quality data, farmers or small players or organic products never have the chance to compete with a big established brand, because they never have the budgets to advertise and market or enter into deals with, if you're taking an example from the pharmaceutical industry, the fact that nearly every single doctor in Europe or in the US is on a payroll from a big pharmaceutical company. So they get a percentage from every recipe, from every referral prescription, from every prescription that they give to the patient for the product manufactured by company X, which is why doctors always do that. They literally get a commission. So again, it's the problem that smaller entrants to the market can never afford that level of barriers. And this is the goal that we have. We want to really change the power dynamics in the supply chain.
Wow. So by the sounds of it, this is potentially the best hope we have for upgrading consumerism to a conscious consumerist model. Would you agree with that?
Beg your pardon again, sorry?
So you hear a lot about conscious consumerism, and that's the idea between, trying to educate consumers so that they can make better purchasing decisions, which is going to be less harmful to the environment, less tyrannical to producers. And by the sounds of it, having these blockchains and supply chains opening up the data and the power distribution, this could be the best way to integrate that kind of conscious consumerism into society.
Absolutely, yes. I mean, the problem is that today a lot of people who don't want to buy consciously are struggling to do so because it's very difficult. You don't know what labels you should trust. You don't know whether the claim that's made on the package is true or not. You assume it is, and you pay more for it, but you don't actually know if that's true or not. And every year there are scandals upon scandals of mislabeled products, of fake claims on whatever not, and it's in tens of billions of dollars annually in big markets like the US or the European Union. It's really a huge level of cheating going on. And of course, a lot of consumers, they think, well, okay, I'll try and follow the labels. But what does the label mean? I mean, there are these different, alliances or different kind of NGOs, which are usually financed by the same corporations, by the way, that claim, oh, it's now, it's a better process. But you don't know what the better process even means, right? They just put a nice label and you pay more for it and you feel good about it because you feel like, oh, I've done something good for the planet. Whereas in reality, if you look deeper, it's all fake. And that's the problem about, how deep do you need to go to see that there is a problem? Like even in Europe, there is this organic label, bio with with a green leaf. And many people assume, oh, hey, if I buy this, then I'm buying, like, a lot of people assume it's the products with this label are also, well, they're organic, they're natural, right? And they assume it's also GMO free. Well, no, it doesn't. What this means is that there are no pesticides in production, but it can actually be a fully genetically modified organism, just without the adding of any pesticides in it. And that's the problem, that many people assume if I'm buying stuff with this organic label, I'm buying good food. But people don't know. People cannot check because it doesn't say on the package that, hey, actually it's got GMOs, because nobody is obliged so far to make it clearly written on the package. So there are a lot of these, what seems to be like trivial legal kind of technicalities, or legal tricks that they do to remove seemingly trivial information from products. But actually, if you consider that any product with this organic label on it costs on average between 60 to 80% more expensive than the non-organic alternative. And if you multiply that by the amount people spend every year on consumer products or even on food, which is, I think in Europe, 320 billion euros per year, then you're talking about substantial amounts of money that people spend blindly, believing they're getting something better, when in reality they're not.
Wow, this is bigger than I thought it would have been, if I'm honest.
Yeah, I mean, sadly, we don't have much time to think about this, right, in our lives. We're so busy with stuff, and we don't have time to do this. But in reality, it's amazing how big of a... It's not obvious, it's not something that you can see. It's not like a giant bank robbery where you can see, people with guns and a pile of money. But it's amazing how much money is involved in this.
Yeah, it is. It's genuinely fascinating, and I've really enjoyed this conversation because I'm going to go research this further. It seems like a pretty obvious application of blockchain then, in which case.
Yes.
So thank you very much for coming on today. I've really enjoyed this.
Yes, no worries. Thank you.
And good luck with everything.
Appreciate it. Thank you.
See ya. Goodbye.
All right. Bye.
Thanks for watching.